Stocks, including pin-up tech stocks, have suffered a bumpy start to the year due to rising inflation and fewer US interest rate cuts being on the cards for 2025 and expectations that company earnings won't be growing as fast. Thanks for your company for the daily. My name's Jessica Amir, a market strategist here with Mumu. So we're seeing US stocks well and truly erode those Trump trade gains. But don't forget, we've got to remember investors have been selling stocks before and after their US financial year ending on December 31. Remember that traditionally occurs end of year and into the new year. And this has accelerated and I guess exaggerated some of the downward moves that we've seen. But now we're starting to see investors buy the dip, buying low-hanging fruit, as in they're buying stocks in the S&P 500, hoping that earnings will be stronger than expected, and then guess what? Push the market higher. And I guess that explains why we're seeing the S&P 500 bounce off its lows. What's also boosting confidence and buying is that we've seen bond yields hit 14-month highs overnight and then fall from that level. And the market's fear gauge, the fear index, known as the VIX, that pretty much mirrored that move too. It hit a fresh high and then fell. So I guess the thinking now is that institutional selling in S&P 500 stocks has slowed. And plus, adding into the mix, we've got investors buying into commodity stocks. And that's pretty much why, all in all, we're seeing S&P 500 and the key index, the SPY, move back above a key technical level, the 100-day moving average. The one, key takeaway here is that this is pretty much a positive sign that the S&P 500's dark days could be over for 2025. So let's wait and see what happens over the next couple of days. But I guess one of the biggest takeaways at the minute is that investors are making inflation their friends, and they're doing well by buying stocks benefiting from rising inflation and rising prices. Agricultural fertilizer companies, Mosaic and CF Industries, both made strong moves up overnight, rising 8% each. If we just take a look at CF Industries, that was a star performer overnight, and it's all for a good reason. CF Industries, an honourable mention, their stock is up 35% in the past 6 months. 17% of that gain has been made since October. Overnight, it closed at $95.50 US. Now, all these gains for very good reason, as we're saying, CF Industries sells fertilizers. And of course, fertilizer prices are on the rise. That's because supply is tight and demand is on the rise. Naturally, that dynamic means higher prices are ahead. Now, when it comes to the stock, bets are on for the stock to move higher too. Options prices and options bets are on for CF Industries shares to hit $100 imminently. And as we said, it closed above $95 overnight. But look, also, from a other fundamental perspective, other analysts out there are also bullish on the stock. Piper Sandler, an investment house, upgraded the stock overnight, giving a $105.80 price target, saying the stock is a buy. But other US investment houses rate CF Industries as a buy. Of note, Oppenheimer is the most bullish. It has a $114 target for the stock. Keep an eye on this stock. As well as other stocks in the fertilizer and agricultural space, such as Nutrien and Mosaic. They're all selling key essential elements in the agricultural industry. And as we said, they're benefiting from higher prices. As for what else to watch, well, locally, a couple of things. We spoke about rising prices, and oil prices are on the move as well. Oil prices are in fact up 7% in 5 days. Now, Australia's biggest oil and gas producer, Woodside, they're also one of the world's biggest oil producers. Their shares have broken out high to the upside as well, which suggests that their shares could continue to rally on up. Now, Woodside shares, looking at the chart as we can see, they are up 5% this year, so well done if you bought into that name. Their stock is also up 12% from that December 16 low. So do keep your eye on Woodside and other oil and gas stocks that are probably going to move higher. Why? Well, the US recently imposed sanctions on Russian oil. Obviously, that means tighter oil while we do have rising demand. Vis-a-vis high oil prices, vis-a-vis you might expect oil and gas stocks such as Woodside on the screen. Woodside, of course, one of Australia's biggest dividend payers, that might probably continue to rise. Last but not least, absolutely, all these moves, not only in oil and gas names, but we've also got other commodity stocks in the mining sector also making moves to the upside. Remember, mining stocks make up 20% of the Aussie share market. So this is all supporting the notion that the Aussie share market could make a comeback this year and maybe outperform the US market, perhaps maybe indeed in the first quarter. So what is supporting this notion as well and this thinking is that we do have metal prices moving higher, such as copper, aluminium, iron ore, as well as lithium as well, which is very encouraging to see. And that's perhaps why you might be expecting more Aussie and international investors to be buying into commodity sector stocks. And that's the daily. Thanks for your company. We'll see you tomorrow.